HiYield's co-founder Scott Smiley is joined by the Erable team today.
Thanks for the intro, Jen. This is Scott, co-founder of HiYield, here with Adam from the Erable team. I'm looking forward to hearing a bit more about Erable and exploring potential collaboration opportunities between HiYield and Erable. Adam, you want to do a quick introduction?
Hey guys, it's an amazing pleasure to be with you. Thanks for the invitation. Sorry for my French accent. I will try to remove it or at least erase it a bit. Sorry for that.
No problem.
Yeah, so it's a pleasure to meet you guys and to explain it to you what Erable is basically, and to know more also from you, the HiYield team.
Sounds good. Yeah, I could kick things off with some brief introductions. You want to tell us what you were doing before Erable, how you got into the blockchain space, and maybe how you came up with this idea?
That's a great question. Basically, I just graduated from school. So basically, I was doing an engineering school in data science and AI, and I was introduced to the blockchain technology and to the blockchain ecosystem through crypto trading.
Yeah.
Unfortunately, basically, I was looking, for better opportunities in the blockchain technology. I was believing into the technology, but I had not the opportunity to dig on good projects. And one day I just searched positive impact, blockchain technology, how blockchain could resolve, the climate crisis or social challenges. And I found Erable. Erable is a French company. So I had the opportunity to join it during my school years. And right now I'm a project manager at Erable, and I'm so glad to be there to explain it to you what Erable is.
Nice. Yeah, definitely looking forward to hearing more about the project. So my background, I got involved in the crypto space in early 2017 is when I started paying attention. I was at Deutsche Bank at the time. My background is in traditional finance and working on asset-backed securities. I've been thinking about HiYield, this type of project, since I first learned about smart contracts and blockchain technology, and thinking about just how my own job at Deutsche Bank could be displaced or at least made more efficient by blockchain technology. So in 2018, I joined the space full-time. I worked for a project called Icon for many years, doing everything from token economics, governance, strategy, working with the community, and then kind of helped bootstrap the DeFi primitives within Icon, working on a project called Balance that's still up and running today. It's a stablecoin and kind of Uniswap equivalent in the Icon ecosystem, and I really found an interest working at the application layer and wanted to leverage my background in traditional finance along with my background building blockchain-based apps to build something that was the convergence of everything I was working on for the last 5 years. So that's kind of where HiYield came from. It's a project that speaks to the work I had done at Deutsche Bank. It's kind of like an on-chain repo facility. I'm not sure if you have a background in finance, that would make a lot more sense, but pretty much we're aggregating liquidity for projects in the real-world asset space and providing a lending market focused on kind of fixed income assets. So I think with that, I'd be curious to hear more specifics on Erable and how you fit into the tokenization space, starting with like the type of assets you guys target. It seems like from my high-level review of your project ahead of this call that you're really focused on sustainability and ecological impact projects. So
yes, indeed. If I have to maybe summarize what Erable is in maybe one sentence, I would say that Erable is an all-in-one crowdfunding solution, which gives the opportunity to Web3 investors, but also and especially Web2 investors, an opportunity to support financially impact projects. So the idea is basically to select quite qualitative impact projects and to just give them the opportunity to get funded through a series of investors. Before explaining what real-world assets we are focusing on, can explain why Erable is what it is right now. We thought that building a crowdfunding solution is the beginning of the solution of three main challenges we identified before. We think our platform as a double-sided platform where we answer the needs and the problematics, the issues of two main persona. The first one is the impact projects and the project leaders. Basically, we do think that the project leaders are lacking funding right now. And to answer this need, we are offering through our crowdfunding solution a kind of launchpad where these projects would be able to raise funds and get funded and to raise funds to accelerate the activity. The second persona we are targeting are the investors, the Web2 and the Web3 investors. And I will specify why I evoke the Web2 cases in a few minutes. But basically, the investors, we identified two main issues for the investors. The first one would be the investment market is quite illiquid, and especially the impact investing one. So basically, we developed to counter and to mitigate this risk and this issue, a kind of marketplace where people were able to buy NFTs. And I will explain what are our NFTs and what the objective of our NFTs. And the second issue is the lack of transparency, So basically, and especially for the sustainability sector, the impact investing sector, people are afraid of social washing, greenwashing, all of that, all the word finishing by washing. And therefore we are trying to build a platform where investors will be able to track and to monitor the investment, and will be able to track and monitor the company and the projects that they are funding. Now, the real world assets, obviously we are targeting and we are focusing on impact projects. So the definition of impact is not clear for everyone, and it's not clear even for me, because it's a complex one and every entity has its own definition of impact. But basically we do reckon that impact projects have basically a positive impact on the society. So it means nothing, but it means something at the end. Basically, we are trying to select projects that have a business sustainability, so projects that are economically viable and sustainable, and we are trying for this project to select specific assets of this project that are generating revenues. So the idea of our NFTs is to fund the assets of these projects, and these assets of this project will generate revenues, and based on these revenues, the early investors will be rewarded. So this is the main idea, and I can explain later if you want a specific use case.
Yeah, no, absolutely. I mean, as you're talking, I'm sitting here trying to visualize what experience would be like, kind of like GoFundMe perhaps with NFTs. What's kind of the investor and seller experience like? What do you see when you come to the platform as an investor? You see like a list of potential deals, or you see a list of potential NFTs you can buy that are in support of a specific cause? Like, is this more of like a donations website, would you say, for nonprofits, or are you like investing in a security? Like, that's something that's still a little unclear to me.
That's an amazing question. Yeah, so it's not a non-profit organization. I have to be clear about that. We are a for-profit organization, and we are giving to the investor the opportunity to invest, and so earn rewards, have profits, on their investment. So it's not a non-profit organization, and we are focusing.
Okay, so like the assets that people are buying on your platform, just to clarify, like, are these securities?
No, it's not securities. It's not securities because we are not targeting on security. Maybe later we will focus on that, but it's not yet the case. Basically, today the NFTs are utility NFTs, basically, and this utility are giving people the opportunity to fund specific assets through a specific phenomenon with the shared treasury. So if maybe I can explain you an example, it would be maybe clear, and we'll be able to maybe figure out how it works.
Starting to remind me of Nouns maybe a little bit, but more with like very specific goals. Are you familiar with the Nouns project? Kind of like reminding me of Nouns a little bit with like a shared treasury.
Yep. Absolutely. Yeah. I'm familiar with the Nouns project. It's like it's a bit similar. Basically, with our NFTs, people have rights on a commune or communitarian treasury, and basically based on the treasury amount, you will be able to fund specific assets. So if I take an example of a project we funded, a French project, so basically in France, and this project aims at building a kind of huge network around reusable containers for restaurants. So basically this project is funding and is building a kind of reusable packaging system network in France for restaurants. And so the idea of our NFT collection was to fund basically the containers, so the reusable packaging, for the restaurants.
Got it. Okay, I see.
And so with the fundraising through our platform, we were able to just fund 6,000 containers. And these 6,000 containers were, just deployed in the French restaurants, and people are generating revenues based on the cycles of this reusable packaging.
Right, so they sell. So the first step for an investor, you come to the website, to Erable's website, you see this cause of buying reusable packaging for restaurants in France, right?
Yep.
And then you deposit some amount of stablecoin, I imagine.
Yep.
And then you receive a NFT. So I guess there's a purchase price for each NFT. There's like a fixed cost to have an NFT. Okay. So you would buy like any number of NFTs based on how much money you put in. And then that becomes all pooled money for a very specific goal that the NFTs have governance over, with that goal being to purchase reusable containers for this restaurant in France. And then I'm assuming somebody is trusted by this DAO to take the USDC deposits, purchase the reusable containers, and sell them to restaurants, and then bring the proceeds back to the NFT DAO. Is that kind of the full cycle of the investment process?
Yeah, this is well explained, and you mentioned something quite interesting is the trust. So
right. Yeah,
basically
we dig into that next, definitely.
Okay. So I will dig it in later then. But yeah, it's pretty well explained. So basically, you just have to go on our platform. We have fundraising sessions, and based on the fundraising session that are live, you are able to buy specific NFTs, and with these NFTs, you are able to fund and finance specific assets.
Okay.
Voila.
Yeah, perfect. Yeah, got it. All right, so starting to make sense here. So, yeah, I guess the next step then is the trust, and is that maybe where Erable comes into play? Like, do you guys play that role for all of these deals as like a trusted third party that ensures the deal goes through and is managed properly, or like kind of how does that work? Is there any sort of insurance? Tons of questions around what happens if something goes wrong as well, like who's on the hook, where's the insurance, and what are like the legal recourse that you would have if somebody is like, we just raised $100,000 for reusable containers. I think I'll buy a nice property in the south of France.
Yep. Yeah, indeed. Yeah. I think you mentioned something right. And actually right now we are working on this kind of trust issue. So right now, if obviously we have, the entity Erable as an organization. Erable is dealing with all the money process. But, in the long run, we would like to autonomize, all this process through, the DAO concept. So the idea will be to have a DAO, with all the NFT holders, and the DAO will just allocate all the funds to the assets if there was stipulated that it should be, So right now, if I have to be clear, we have an organization, Erable as the organization is dealing with all the funds. So basically, when you have the fundraising, you have the funds that are going to a specific treasury where all the investors. We have the contract, so basically, you have the address of the treasury. You can share the address to the investors to show that the funds are safe and the funds are not allocated to bullshit assets. And basically we have a kind of safe with the project leaders we are supported, and based on this safe we are allocate the funds to the purchase of the assets we mentioned to the investors before the fundraising. So yeah, right now we have strong components into the trust aspects, basically the trust in the organization as a Erable, in the project leaders. It's a huge component in our value chain. At the end of the next year, maybe we will have something quite automated, because we will have a DAO, and the votes made by the DAO will be automatically launch transactions, and so you will be able to pay the project and you will be able to buy the assets, and that's it.
But I guess going into just your specific example that you shared of buying reusable containers, I mean, the reusable container company is not going to accept USDC. So that USDC needs to make it into somebody's bank account at some point. So where is the accountability there? And, is there any legal recourse that the NFT holders have in the event that something goes wrong? Of course, you're going to try and make sure something doesn't go wrong. But if it does, kind of what happens and who and what's the legal recourse, right? In a mortgage or something, if you stop paying your mortgage, the bank has legal recourse. They can approach the U.S. government and say, I want to seize this home. And they will take your home and they will sell your home. And that's the legal recourse they have.
Yep.
So what's that kind of situation in this example?
Yeah, for the case of the reusable company, the reusable containers company, basically we made the contract between our organization, Erable, and the project leader company. So it's called Pixo. You can see the project on our website. So we have a contract where we are stipulated that the fund raised through our fundraising will be allocated to the purchase of 6,000 containers, we have also a contract, because you would be able to mention that the containers are generating revenues, but what if a container is lost? What if a container is broken? What happens to the funds, and what happens to the revenue generated by the investors? Basically, with this contract, we also have a kind of clause, an insurance clause, where all the containers are insured for many years. I think it's 10 years. So all the containers are insured. So basically, right now we have a contract between the organization, the private organization.
Is that unique to this deal, the insurance, or is that across all deals you try to get the assets insured?
The idea of the insurance is to make sure that the investors will be rewarded for their investment. For the case of Pixo, it was specific, and the idea is for all the future projects we will have something quite concrete where, and I will explain it later, but where your investment will be backed by real assets. So basically, you will have the ownership of the assets that are going to be funded. So it's not the case yet for the Pixo thing. So basically, the investors, the NFT investors, do not have the ownership of the containers. But in the future, we do want to have the investors, so the NFT holders, as the owner of the assets they are funding. So right now, for instance, we are funding washing machine for French households, and the idea in the short run will be to give the opportunity to the investors to just own the machines. And this is quite interesting because it gives trust to investors, because if the company fails, then the investor will still have the asset and will still be able to sell the asset. So basically it gives hedge to the investors, and it limits the risks belonging to this investment.
Yeah, and I mean, as we've been talking here, it's reminding me of just a constant issue in the real world asset space is just legal recourse for token holders and on-chain holders. Like, somebody out there in government needs to recognize that this group of NFTs is the true owner of these assets and not some kind of off-chain entity. And I do think Europe is making some good progress over the years in terms of creating genuine regulation around distributed ledger technology. There's something in Switzerland about DLT technology. I can't remember the specific act, but around like recognizing blockchain-based transactions as legally binding, and giving token holders legal recourse. So it's something that at some point we do need some form of government intervention to really solve.
Absolutely.
And in the meantime, you can have this trusted entity yourselves, right? Like engaging in legal contracts on behalf of DAO members. But I do hope at some point in the future we see governments recognize DAOs as entities and DAO holders as having legal recourse directly without needing some kind of entity sitting in between.
Yeah, absolutely. And as you said, I'm in favor of regulation, because regulation will bring transparency and will build also trust. So I do think that right now we have a lot of people that are quite afraid of Web3, blockchain technology, investment in Web3. It could be quite risky for people, and I think that regulation could bring a new type of investor, a new type of users into the Web3. So I'm quite in favor of this.
Yeah, definitely. Yeah, I totally agree there. So I guess in terms of where HiYield could potentially come into play here, of course, I've been thinking about that throughout this conversation as well. Where, and that raises this next question is like, are these deals structured as loans, or is it some kind of equity deal or like investment contract? Like, does the DAO or anybody have upside and like what you could sell the containers for at like a maximum price? Is there variability in the returns, or is it kind of like a fixed rate? Like, we're going to give you $100,000, we expect back 120 after 8 months. Like, what's the HiYield tends to work on fixed income style investments with a duration. So I do feel like perhaps this container deal or reusable container deal could have been structured as a loan with let's say $100,000 initial investment with a 20% return over a year, something to that effect. and just get back 120 at the end of the year. That's something that we'd be able to provide liquidity for in the high yield lending market, maybe to Erable directly rather than your NFT holders is something I was potentially thinking. So to give you guys some liquidity like between deals. So anyway, I'll just pause there. Let me know kind of how those deals are structured.
It's a good question because I forgot to mention, but our funding model is quite similar to, I'm sure you are familiar with it, but the revenue-based finance model. So the idea is that we are funding specific assets of the project value chain.
You're kind of borrowing against future revenue. Is that kind of how it works?
Absolutely. So the idea is that we fund specific assets, and these specific assets, are generating revenues, and so investors are rewarded. So all the profits made by the investors are based on the revenue generated by the assets funded. So it's not a loan, it's not equity either. It's more like revenue-based finance. It's more like a royalty contract on the assets.
You get a fixed percentage of the sale.
Absolutely.
How does that kind of
It's not. It's more like you get a percentage of the revenue generated by the assets.
I see.
So for the Pixel, for the containers I mentioned before, so the business model of the company is quite unique and interesting. So the company, the impact company, is generating revenue for each cycle made by the reusable containers, and so each reusable containers is making money for the company, and a share of this money is allocated to the investors. This is basically the business model.
So there's no maturity, right? It's just an ongoing thing. Like they get a percentage of all of the sales, and when the company sells all of their containers, they don't just pay back the loan and retire the project. They continue to buy more containers and then sell more containers. Is that how it works, or is there maturity?
So the business model of the company is not like selling containers; is more like renting. So basically, you are giving, you are renting containers to restaurants, and the more cycles there are with your containers, the more revenues you are generated. And so basically, if the cycles are just continuing, you will generate revenues, basically.
I see. Yeah, I mean, this is very similar to an asset-backed security, some kind of projects I used to work on when I was at Deutsche Bank. Pretty much everything with the cash flow these days is, believe it or not, in a bond held by some kind of pension fund or an insurance fund. Even the payments you make on your cell phones. I mean, I remember working on a deal that it was like a Verizon phone deal. It was $1 billion financing for Verizon, and it was backed by the future repayments of iPhones and such. And those repayments or those bonds are ultimately held by pension funds, and the repayments on your phone ultimately flow through to these types of investors. So it sounds like it's kind of smaller scale right now, but at some point some of these deals I could see being structured into ABS products to allow let's just sticking with your example, you could take 100,000 containers, kind of put them into a special purpose vehicle. It'd be called an SPV off chain that technically owns the containers and all their cash flows. And then that SPV borrows from investors and repays them using the cash flows from the containers. And that gives more financing to the container company to go out and buy and build more containers. So that's kind of like the flywheel of debt financing for these types of cash flow assets. It's something we could potentially work on together to help structure that deal. If that's, maybe getting any gears turning in your head about how, we could get even more financing for the projects and try and close some of these financing gaps, allow them to scale faster. So if that's something that, could make sense to you and, you guys think about, you'd want more access to financing through these types of deals, that's definitely something we could work on together.
Yeah, with pleasure. Yeah, we are open to all discussions. So, we are a small company. So basically, we are a startup. So our DNA is like iteration. So our DNA is to just try things. If it doesn't work, we are trying to figure out why it's not working. And if it works, well, amazing,
Absolutely. So if debt financing for, maybe talk to some of these companies you guys are working with. I'd be happy to even get involved there to explain how the deal works with my finance background. But, think about how you can take these cash flow generating assets, set them aside and get like kind of one large lump sum financing to go out and buy more containers and generate more cash flows. Just an example. But yeah, with that, I think, this has been really interesting discussion. I think Erable is a really cool project with some potential collaboration opportunities, some potential benefits to leverage high yield liquidity aggregator lending market. And definitely looking forward to exploring more collaboration opportunities with you guys, and would love to have another Twitter space as both of our projects progress.
Yeah, absolutely. And I do think that regarding the fact that you are a liquidity provider, aggregator, we are right now trying to develop a new solution, because as I mentioned at the beginning of the call of the Twitter space, of the X space, sorry. We are a Web3 solution, but also a Web 2, and basically we are targeting also Web 2 real world projects. We do want to focus more on the Web 3 aspect that we don't answer yet. Basically, right now we are trying to build a kind of DeFi protocol. The idea is to be basically a yield aggregator, and to give the opportunity to investors to expose themselves to traditional DeFi solutions such as Aave, for instance, but also to our financial products. So the company we are supporting, for instance, T-bills, because I saw that you had T-bills on your platform and stuff like that. So the idea is to have a share of the investment on our protocol, focusing on generating traditional yield on DeFi protocol, and a share of the amount deposited in our platform allocated to the funding of real world assets projects.
Oh, yeah, that's definitely something we could collaborate on. I think we could kind of be one of the back end lending markets that you guys supply to, since we do have kind of that focus area on real world assets, as opposed to depositing in like Aave or Compound, where you're just kind of funding leverage against crypto.
Yep. Yeah, absolutely.
So great. Yeah, awesome. Definitely we should talk more about that. And it was great chatting with you, Adam. And I do think what you guys are working on is really interesting, and I'll be following along closely. Thanks for the time.
Thanks. It was a pleasure. Thanks for the invitation. And feel free to just contact me, guys, if you have any questions regarding Erable. If you have any questions regarding our business model or the project we are supporting, I would be pleased to answer.
Sounds good. All right, folks. Thanks for listening. Thanks for your time, and we'll talk again soon. Take care.
Thank you, guys. See you.